Welcome to the Northbound Wealth Podcast. All opinions expressed by me, my co-hosts, or my guests are solely our own opinions and do not reflect the opinions of Northbound Wealth Management. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast. Hello, everyone. This is Brent Foster, and this is the Northbound Wealth Podcast, the 91st episode. Let's dive in to what's happening in the markets. So stocks were mixed during the first trading week of December. Technology stocks led, while widely followed Dow Jones Industrial Average struggled. The tech-heavy NASDAQ Composite Index picked up 3.34%, while the Dow lost 0.6%. The S&P 500 index added 0.96%. The MSCI EFA index, which tracks developed overseas stock markets, gained 1.46%. So last week, pretty good week. Tech stocks, they take charge. So the S&P and NASDAQ rallied to start the week, closing at record highs Monday and Tuesday. The Dow fell on both those days. During a conference speech, Fed Governor Christopher Waller said he supports rate adjustments in the December for now, which seemed to add more momentum to the S&P and NASDAQ's gains. So for whatever reason, Fed heads opine and markets move. Tech shares continue to propel stock gains midweek on the strength of a few better than expected Q3 earnings reports. On Friday, the S&P 500 and NASDAQ hit record highs following the November jobs report. Both notched their third consecutive winning streak. By contrast, the Dow was down 4 of the 5 trading days last week, ending the week in the red after 2 back-to-back weekly gains. So year to date, the Dow is up 20.91%. MSCI EFA is up 8.73%. The NASDAQ is up 32.11%, and the S&P is up 29.01%. Year to date through the end of last week, thanks to Y Charts. Thanks for that data. I'm going to be talking a little bit more from what Y Charts puts out. But the 10-year note in bonds in the bond land is it closed last week at 4.15%. That's down over the last month from 4.42%. So about a 6.11% decline. So you'll see kind of bonds rallying there as far as price is concerned. So let's talk about jobs. Jobs rebound after 2 hurricanes and an aircraft maker strike weighed on the labor market in October. The November jobs report released Friday gave investors what they were looking for: confirmation that the October update was an anomaly. While November payrolls topped expectations, investors believe the hotter than expected report would not influence the Fed's upcoming decision regarding short-term interest rates. The Fed's scheduled 2-day meeting ends on December 18th. So keep that in mind as today is the 9th. This week, key economic data. Again, we're looking at productivity and costs, the CPI report Wednesday, 10-year Treasury note auctions. We'll be watching those. Thursday, weekly jobless claims, producer price index, Fed balance sheet, and Friday, import and export prices. So we'll take a look at that. Let's see. This week, notable companies reporting earnings. Monday, Oracle. They still keep crushing it. We'll see what happens here after the bell. This is recorded before the bell, so we'll see what goes on with them. I think they're up like 80% year to date. Tuesday, AutoZone. Wednesday, Adobe. Thursday, Broadcom and Costco, one of our favorite retailers. I don't know anyone who doesn't go to Costco. It just seems like everyone around me does. It's amazing. You go in there, and it's like you can't come away without spending like at least $100 unless you go in there for lunch to eat their hot dog or something. And then it's like $5 for like this smorgasbord of food. It's crazy. I feel like they just give it away. It's a loss leader for them. All right. Tax tip of the week. Beware of the fake charity scam. Since we're giving, there are so many scams out there. One of the most heartless is taking advantage of people who want to give money to a legitimate charity, especially after a tragedy or a disaster. Scammers can set up fake organizations to take advantage of people's generosity. These scams are usually over the phone, and while the organization may sound legitimate, the person on the other end might demand a donation immediately. Remember, a charity will happily receive a donation anytime, so you shouldn't feel pressured. You can research charity organizations using the IRS tax exempt organization search tool. It's a good tool. This will help you narrow down a list of legitimate charities. You may even be able to claim a deduction on your tax return. Standard deductions are fairly high, so it kind of makes it tough these days. But doesn't mean that you're not able to do that. This information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. We got a good show for you. Stay tuned. Hello, everyone. Because Warren Buffett is getting older, I thought I'd read one of his letters. I don't always do that, but I felt like this would be an appropriate time given he's like 94 years old and who knows how many more letters he's going to write. But for those of you who are interested, you can check out his letters if you subscribe. You got to go out to Brookshire's website and put in some information and you'll get his letters. But I thought I would share this. This was released on November 25th, 2024, out of Omaha, Nebraska, Berkshire Hathaway. So today, Warren E. Buffett will convert 1,600 A shares into 2,400,000 B shares in order to give these B shares to 4 family foundations. 1.5 million shares to the Susan Thompson Buffett Foundation and 300,000 shares to each of the Sherwood Foundation and the Howard G. Buffett Foundation and Novo Foundation. Mr. Buffett's comments to his fellow shareholders follow. So here's his letter to shareholders. The gifts I'm making today reduce my holdings of Berkshire Hathaway Class A shares to 206,363, a 56.6% decrease in my 2006 pledge. In 2004, before Susie, my first wife, died, the two of us owned 508,998 Class A shares. For decades, we have had both thought that she would outlive me and subsequently distribute the vast majority of our large fortune. That was not to be. When Susie died, her estate was roughly $3 billion, with about 96% of this sum going to our foundation. Additionally, she left $10 million to each of our 3 children, the first large gift we had given to any of them. These bequests reflected our belief that hugely wealthy parents should leave their children enough so they can do anything, but not enough that they can do nothing. Susie and I had long encouraged our children in small philanthropic activities and had been pleased with their enthusiasm, diligence, and results. At her death, however, they were not ready to handle the staggering wealth that Berkshire shares had generated. Nevertheless, their philanthropic activities were dramatically increased by the 2006 lifetime pledge that I subsequently made and later expanded. The children have now more than justified our hopes and, upon my death, will have full responsibility for gradually distributing all of my Berkshire holdings. These now account for 99.5% of my wealth. Father Time always wins, but he can be fickle, indeed unfair and even cruel, sometimes ending life at birth or soon thereafter, while, at other times, waiting a century or so before paying a visit. To date, I've been very lucky, but before long, he will get around to me. There is, however, a downside to my good fortune in avoiding his notice. The expected lifespan of my children has materially diminished since the 2006 pledge. They are now 71, 69, and 66. I've never wished to create a dynasty or pursue any plan that extended beyond the children. I know the three well and trust them completely. Future generations are another matter. Who can foresee the priorities, intelligence, and fidelity of successive generations to deal with the distribution of extraordinary wealth amid what may be a far different philanthropic landscape? Still, the massive wealth I've collected may take longer to deploy than my children live, and tomorrow's decisions are likely to be better made by three live and well directed brains than by a dead hand. As such, three potential successor trustees have been designated. Each is well known to my children and makes sense to all of us. They are also somewhat younger than my children, but these successors are on the wait list. I hope Susie, Howie, and Peter themselves disperse all of my assets. Each respects my wish that the disposition program for my holdings of Brookshire shares in no way betrays the exceptional trust Brookshire shareholders bestowed upon Charlie Munger and me. The 2006 to 2024 period gave me the chance to observe each of my children in action, and they have learned much about large-scale philanthropy and human behavior. Each has overseen teams of 20 to 30 for many years and has observed the unique employment dynamics affecting philanthropic organizations. Wealthy friends have been curious about the extraordinary confidence I have in my children and their possible alternates. They express particular surprise at my requirement that all foundation actions will require a unanimous vote. How can this be workable? I've explained that my children will forever be besieged with earnest requests from very sincere friends and others. A second reality: when large philanthropic gifts are requested, a quote, no, end quote, project, whatever, those who can distribute huge sums are forever regarded as targets of opportunity. This unpleasant reality comes with the territory. Hence, the unanimous decision provision. That restriction enables an immediate and final reply to grant seekers. It's not something that would ever receive my brother's consent, and that answer will improve the lives of my children. My unanimity clause, of course, is not a panacea. It clearly isn't workable if you have 9 or 10 children or stepchildren, and it doesn't solve the daunting problem of intelligently distributing many billions annually. I have one further suggestion for all parents, whether they are of modest or staggering wealth. When your children are mature, have them read your will before you sign it. Be sure each child understands both the logic for your decisions and the responsibilities they will encounter upon your death. If you have any questions or suggestions, listen carefully and adopt those found sensible. You don't want your children asking why in respect to testamentary decisions when you are no longer able to respond. Over the years, I've had questions or commentary from all three of my children and have often adopted their suggestions. There is nothing wrong with my having to defend my thoughts. My dad did the same with me. I change my will every couple of years, often only in very minor ways, and keep things simple. Over the years, Charlie and I saw many families driven apart after the post-humanist dictates of the will left beneficiaries confused and sometimes angry. Jealousies, along with actual or imagined slights during childhood, became magnified, particularly when sons were favored over daughters, either in monetary ways or by positions of importance. Charlie and I also witnessed a few cases where a wealthy parent's will that was fully discussed before the death helped the family become closer. What could be more satisfying? As I write this, I continue my lucky streak that began in 1930 with my birth in the United States as a white male. My two sisters had, of course, been explicitly promised by the 19th Amendment's enactment in 1920 that they would be treated equally with males. This, after all, had been the message of our 13 colonies in 1776. In 1930, however, I emerged in a country that hadn't yet gotten around to fulfilling either aspirations, aided by Billie Jean King's Sandra Day O'Connor, Ruth Bader Ginsburg, and countless others. Things began changing in the 1970s. So favored by my male status, very early on I had confidence that I would become rich. But in no way did I or anyone else dream of the fortunes that have become attainable in America during the last few decades. It has been mind-blowing, beyond the imaginations of Ford, Carnegie, Morgan, or even Rockefeller. Billions became the new millions. Things didn't look great when I arrived at the beginning of the Great Depression, but the real action from compounding takes place in the final 20 years of a lifetime. By not stepping on any banana peels, I now remain in circulation at 94 with huge sums in savings. Call these units of deferred compensation that can be passed along to others who were given a very short straw at birth. I am also lucky that my philanthropic philosophy has been enthusiastically embraced and widened by both of my wives. Neither I, Susie Sr., nor Astrid, who succeeded her, believed in dynastic wealth. So I am also lucky in my philanthropic philosophy I'm also lucky that my philanthropic philosophy has been enthusiastically embraced and widened by both of my wives. Neither I, Susie Sr., nor Astrid, who succeeded her, believed in dynastic wealth. Instead, we shared a view that equal opportunity should begin at birth and extreme look at me styles of living should be legal but not admirable. As a family, we have had everything we needed or simply liked, but we have not sought enjoyment from the fact that others craved what we had. It also has been a particular pleasure to me that so many early Brookshire shareholders have independently arrived at a similar view. They have saved, lived well, taken good care of their families, and by extended compounding of their savings passed along large, sometimes huge sums back into society. Their claim checks are being widely distributed to others less lucky. With this philosophy, I have lived the way that I've wanted to live since my late 20s, and I've now watched my children grow into good and productive citizens. They have different views in many cases from both me and their siblings, but have common values that are unwavering. Susie Jr., Howie, and Peter have each spent far more time directly helping others than I have. They enjoy being comfortable financially, but they are not preoccupied with wealth. Their mother, from whom they learn these values, would be very proud of them, as am I. And that concludes Warren Buffett's comments. About Berkshire Hathaway and its subsidiaries engage in diverse business activities, including insurance and reinsurance, utilities and energy, freight, rail, transportation, manufacturing, services, and retailing. Common stock of the company is listed on the New York Stock Exchange, trading under two symbols, BRK Spot A and BRK Spot B. And that is the end of the letter. You can contact Mark Hamburg, who wrote that up. Let's see here. For fun, let's look at what Berkshire Hathaway stock is actually trading for. First with BRKA. The A share is trading on the New York Stock Exchange, end quote, close of trading on December 9th of $696,160. And the B share is trading at $463.87. So if you do hundreds of thousands of shares, multiply that by hundreds of thousands of dollars, you get a whole lot of money. But anyway, the lessons, again, from the Oracle from Omaha ring true today. And I think it's great advice, what he was talking about through philanthropy and teaching your kids and the next generation about finance. But he's not giving them the whole thing. He's teaching them to break the power of money in your life. You need to give it away, especially if you have it. And do that with a grateful heart. Be a cheerful giver, and it won't return void. So with that, I'm going to wrap up this week's call. in this week's podcast. Stay tuned for the 92nd episode of the Northbound Wealth Podcast next week. Thank you so much for tuning in. Have a great week.